Good afternoon, everyone, and welcome to Specialist Lending Solutions Lunchtime Learnings with Shawbrook Bank. My name is Anna Sagar, Assistant Editor for Specialist Lending Solutions, and I will be hosting today's session, which will discuss bridging and how it can be used to solve the EPC challenge. I am joined today by Shawbrook Bank's National Relationship Manager, Lee Williams, who will outline the challenges for landlords and brokers from upcoming legislation and tips on how bridging can be used to deal with regulation changes and help expand clients' portfolios. We'll be doing a Q&A at the end of the session, so if you have any questions, please submit them in the Q&A box. So without further ado, over to you, Lee.
Thank you, Anna, and thank you everyone for taking the time to join us. Yes, as Anna says, I'm going to cover off a bit today around Shawbrook. For those of you who may not have heard of us or come across us before, I'm going to cover off what the EPC challenge is and also how Shawbrook can help. So a bit about Shawbrook to start with. We're a digital specialist UK lending and savings bank that's focused on property finance, business finance and consumer lending and savings. We've been around since 2011, and since that time we've significantly grown our business up to £6 billion of originations lent since that time. Whilst we're a digital bank, people are very much the lifeblood of our business, and whilst we've invested in technology significantly over the last year or so, we'll never move away from the experience of an underwriter looking at a case on its merits and being able to come up with a decision as to whether the deal is right for the client and for us or not. So I work in the property finance division, so we're committed to lending and supporting landlords and SMEs with property transactions, and we work solely with intermediaries across the UK, establishing long-standing relationships that have stood the test of time since our inception. We're proud to have specialist expertise. Our underwriters are human beings that don't sit in their ivory towers, but actually can communicate with brokers and clients alike to solve simple questions and move cases on quickly and be able to get a really good understanding about the client and the deal. Our products and our criteria are very transparent. So all of our criteria is published on our website under the intermediaries page, and it outlines exactly what the underwriters underwrite to and the terms available. We've won multiple awards over the years, and on the right hand side there you can see just a few of the ones that we've won recently. So ahead of the curve, I mentioned that we've significantly invested in our technology over recent times, and we're really proud of our new application portals. One of them is called My Shawbrook Bridging, and the other one, the My Shawbrook Buy to Let portal. These portals have been game-changing, and I'll come on to what they can do a little bit later in the slide deck. But as well as that, as I mentioned, we've got an expert consultative relationship team. So our team of business development managers and national account managers are there to support our brokers and to help shape perhaps more complex deals that perhaps don't quite fit with criteria, but are a good deal that we can lend our support to and help smooth the process for the underwriting and liaise between the underwriter and the broker and the client. As I mentioned before, our underwriting team are accessible and very experienced, and they're always available to speak on the phone to brokers and to answer queries. We very much enhanced the use of automated valuations, especially around the new portals, which means that we can remove the need for a physical valuation to be done on some cases, and we can lend up to £2 million and 75% loan to value using automated valuations. And again, I'll come on to that in a few slides' time. We have a market-leading product switch proposition. So when a client comes to the end of the term of the loan with us, if they wanted to switch on to another term with us and keep the loan with us, then they can use another portal that we've developed, which enables them to switch products very quickly and efficiently, either themselves or with the help of their broker. And it can be done within 5 to 7 working days, the actual deal switch to the new product. We've also got a really good bridge to term process. So if a customer does a bridging loan with us, let's say they've bought a property and they want to improve it and then retain it onto a term loan, then we can use the same valuer to confirm the afterworks value. So they're not going to have any nasty surprises from a different lender's valuer going out and wiping out any profit that they have made. We also reduce the arrangement fee on the term product for the client, which means that they only have to pay half the fee that they would if they're bringing a standalone deal to us, so 1% instead of 2%. Because we've already got a charge over the property, the legals are either zero or minimal. So again, it reduces costs, it speeds up the process for them, and it gives them that certainty that the deal is going to stack up from the moment that they submit the bridging application. We've also got a complex deal forum, and this is where us as BDMs can really get involved and add value. And that's for the more complex, larger deals where rather than submit a full application and getting all the information into us, which can be time consuming and lengthy, only to find out we don't have appetite for it, we can put at a very early stage a paper together to put in front of our head of underwriting, head of risk, and the other key stakeholders in the committee, and just at an early stage gauge whether it's a deal that we would have support for, and whether, if there's an exception to be made on our criteria, whether we'd be prepared to do that. So that's a really good forum to use, and again, it helps with those larger complex deals at an early stage gauge whether it's something we can look at or not. So I mentioned our game-changing new portals. So let me just give you a little bit of information about what it can do. So what it does, it uses advanced decisioning techniques, and it links with external agencies to enable us to minimize the amount of information that the broker has to input, but also give a really good, meaningful result. So to give you an example, if somebody's doing a limited company application, it will contact Companies House as you put in the company name, and it will pull through all the directors and shareholders information so that you don't have to manually input it. And then when you get through to the property page for the security that we're looking to take, if the client's doing, for instance, a portfolio refinance, it will pull through all the properties that are registered at Land Registry under that client, and you can just untick the ones that you don't want to refinance, and it saves having to manually input every single property and all the details about the property. But even better than that, when you get onto the next page, it's going to run an automated valuation wherever it can on a property such as a single dwelling house or a single flat in a block up to 4 stories, or even a small HMO up to 6 occupants where we can use bricks and mortar, 2 million in London, 1 million outside of London. It'll run the automated valuation before you've even done a hard credit search. So you've got a meaningful decision as to what the maximum loan we can lend is, and the products that are available before you've even run a hard search. And it just takes minutes to do. As a result of this, we've seen applications where we've done most of the underwriting as part of this portal, where we've been able to get to formal offer within a couple of days, and even complete on a deal from start to finish, where we can use title insurance to save the customer being represented on their side by solicitors. We've done completions in around about 7 to 8 working days, which is phenomenally quick. So moving on to the EPC challenge, we published a white paper on this around about February time, I think, this year. So the EPC challenge, or the EPC standards, in case some of you don't know, in 2015, the government outlined the Minimum Energy Efficiency Standard, or MEES, where they said that by 2025, all newly rented properties have to reach an EPC rating of C or above. And then by 2028, that will be extended to all rental properties. It's fair to say that's an ambitious target, and that it's going to create a series of challenges to the market, particularly as a significant proportion of the UK stock was built prior to 1940 and therefore is unlikely to be rated as C or above. Carrying out works in the short term is going to take significant time and money, especially for large portfolio investors or those that have got older properties. And there's concern that some landlords will struggle to meet the deadline, leaving their properties unlettable and also unmortgageable. So regionally, 4 in 10 properties were built prior to 1940 in London, and it's a similar story in the southwest, in Scotland and in Wales. And 23% of the 1,000 landlords we surveyed admitted that their properties are rated D or below. Older properties are clearly likely to have a lower EPC rating, with 30% of the Victorian properties found to have D or below. They're also more complex to renovate and are going to require more specialist work, such as sash windows, thatch roofs, etc., etc. More worryingly, 27% of the landlords didn't know what their current rating is. On the right hand side there, you can see of the landlords we surveyed, how many of them are likely to pass at least some of the costs onto their tenant. And you can see in most regions, it's around about 1 in 2, with London the most likely at 68%. And particularly, obviously, as we've got a cost of living crisis and rising costs and inflation, that could have a massive impact on the tenant market. Moving on to the knowledge gap, 47% of the landlords said that they'd like to see some more guidance around the legislation and what it specifically means to them. And 37% would like to see more industry incentives, such as favourable borrowing rates. 29% wanted to know who can help them, what suppliers can assist them. And 34% would like more guidance on timings and how to phase the implementation of changes, with 29% more liking guidance on how to communicate this to tenants, and 21% would like some kind of forum to be able to discuss the shared problems and solutions. So the considerable proportion of landlords not really fully understanding the impact that these EPC changes will have on them and their business model suggests that there's a greater issue. And an element of this could be how the message is filtered down to landlords. And it's also likely the message may not have filtered into conversations between the landlords and their mortgage broker or lender. So moving forward, it's paramount that our industry is speaking to clients on a regular basis about their plans for addressing this issue. And as a broker and a lender, it's a really good opportunity to differentiate yourselves from others that are not talking about it at all. How much is it going to cost? Well, 31% when asked of landlords said that they think they've only just got enough funds to be able to cover the costs. This was done in February, so with inflation and rising costs, escalating costs going on, I suspect that figure is probably higher now, or lower, sorry. 14% say they don't have access to the funds, and 6% worryingly don't know whether they've got the funds or not. And as I just said, brokers have got a unique opportunity to work with their clients to improve and help improve the UK's overall housing stock, which of course is the spirit behind these changes, really. So regular communication with landlords, particularly those with complex portfolios around what their plans are, will be invaluable for addressing this before they get into a sticky situation nearer the time. And with costs being one of the issues, I think there's other considerations as well. So 42% of the landlords said that they'll have to get their tenants to vacate to be able to do the work, and 38% of those landlords said that it could take up to 4 weeks to complete the work, and at the extreme end of the scale could take up to 4 months. So they may have to house their tenants at the client's costs while they do those works. And in terms of costs, I think the average cost they thought was going to be around 5,000 per property to do the refurbishments, and then they also could potentially lose rental income of around about 5,000 as well. So there could be a cost of around 10,000 per property, which is no small amount, plus including the loss of income. So here's a case study of how we used a bridge to help a customer with an EPC challenge. So this customer was looking to buy a flat in Manchester. They were looking to get it just on a straight buy-to-let mortgage. However, when the valuation came back, we found that the property had a F EPC rating and therefore wasn't mortgageable. The previous owner wasn't willing to carry out the works to improve the rating, so the client was at risk of losing the property. We were able to offer the client a first charge bridge, which helped them purchase the property and carry out the necessary works to improve the EPC. And then once the work's been completed, the customers will then be able to move it onto a buy-to-let mortgage as they originally planned. So talking about bridging finance, I think it's fair to say in times gone by, and even today sometimes now, we still come across people thinking that bridging is a very expensive solution and maybe a lend of last resort, and it has a bit of a stigma about it. But serious property professional investors, easy for me to say, see it very much as part of their solution to be able to maximise their opportunities and maximise their profits. And rates are nowhere near where they used to be in terms of being expensive. So why do brokers work with us? Well, we also have a development finance team, so we work well with them where perhaps you've got somebody buying a property to get planning and then exiting onto development finance, or at the other end when they're finishing a development finance project and wanting to exit. If somebody's just buying a property and doing their first light refurbishment project, they don't need to have prior experience. It can be their first project, and we'd use that project as the experience then to exit onto one of our term loans if they choose to keep it. We've got an expert consultative relationship team and also direct access to our bridging underwriting team who are in a position where they can be really quick if it's an auction purchase and be able to complete within auction purchase deadlines, even at this time where we're seeing record application numbers due to rate rising environment. Because this is a separate underwriting team, they can still meet those very urgent deadlines. And we've got flexibility in terms of interest can be rolled up, serviced, or part rolled up. And also with us, the arrangement fee is added on top of the maximum loan to value, which means that the customer gets a higher amount on day one as a net loan rather than having the arrangement fee deducted. So here are some of the reasons why people take bridging. So EPC improvement is definitely one of those, coming under light refurbishment, but it can be for things, as I mentioned, like developer exits, capital raising for deposits for onward purchases, auction purchases where they've only got perhaps 3 or 4 weeks to complete the purchase or lose their deposit. I mentioned planning gain, so somebody buying a property to get planning permission to convert to something else. More heavy refurbishment, so things like converting a house into a large HMO or to a multi-unit block of flats. We're seeing more people looking to convert commercial space into residential or just refurbishing single dwelling properties. We also do regulated bridging, where people perhaps might be looking to not lose the house of their dreams because their chain's broken, to do a bit of light refurbishment on the property they're looking to buy or sell before they move in. And then capital raising to fund the onward property purchase, downsizing, auction purchases, or divorce settlements is another one that we see on regulated bridging. So regulated being whether either living in the property or looking to live in it. This is another case study on our bridging side. So this is one of my deals for one of my brokers. So a customer was looking to do a short-term bridge for an urgent auction purchase, and we had only 2 weeks to complete on it. Right at the last minute, it was an auction purchase, and we found out that the client had won the property in their individual name, but were looking to buy it in their limited company name. The auction house helpfully wouldn't change the name on the purchase, so we had to complete 2 land transfers on the same day to transfer from the vendor to the individual and then from the individual to their limited company. We managed to overcome that and complete on time, so the client didn't have any penalties. And we offered them 155,000 bridge on 12-month terms. They were going to do some work on it and then switch to one of our buy-to-let products. This just gives you a little bit of information about the product. So our rates on light refurbishment and straightforward bridging on residential starts at 0.6%, and then on heavy refurbishment it's 0.1% more expensive. Our minimum loan size is only 50,000, and we've got an interesting product where for light refurbishment we can lend up to 85% of the day one value to help towards the cost of the light refurbishment. Oops, sorry, let me go back. So this is fairly unique in the market because it's all done on day one. There's not any stage drawdowns. You don't have to spend the money first and then claim it back. There's no site visits to costing £500 a time, which can be costly. It's very simply 85% of the day one value and enables to potentially fund 100% of the refurb costs. The other thing is that we lend on residential properties against market value, whereas some other lenders that have got similar type products to this tend to lend on the vacant 180-day value, which means that we can lend more than them in lots of instances. On regulated bridging, again, loans start at 50,000 and we can lend up to 12 months starting at 0.45%. In terms of once the works are done and the customers improve their EPC rating, we've got an energy efficient discount available on our buy-to-let products. So if a customer's buying a buy-to-let property and the EPC rating is at least a C, they'll get a discount from their arrangement fee when taking out a mortgage with us. So the standard arrangement fee is 2% or 1% if they're switching from our own bridge. And then the discount is 0.25% off if it's a C rating, 0.45 if it's a B, or 0.6 if it's an A rating. So an A rating property would attract an arrangement fee of 1.4% or 0.4 if it was refinancing our own bridge. On top of that, if a customer improves the EPC rating during the term of our loan, we'd rebate the arrangement fee with that discount and offer them £100 to help with the cost of the new EPC certificate. So some nice incentives there to help with the costs that we've just mentioned previously, really. So that's the end of my presentation. My contact details are here. And I'll be happy to chat with anybody about any questions they've got or any scenarios they'd like to run past me offline. But in the meantime, I'll pass you back to Anna, who's going to host the question and answer session. Anna, you're just on mute.
I thought you think I would have learned during the pandemic, but thanks so much for that, Lee. That was very informative. So to kick off our Q&A, you mentioned in the presentation about landlords maybe not having a great awareness of the upcoming EPC challenge. What can brokers and lenders do to raise awareness of the EPC challenge? And I suppose especially what can brokers do to signpost to their clients?
Yeah, I think it's a really good question, Anna. And I think really it's a case of differentiating yourself between you and the other brokers that are out there. And if you can just have an awareness and an understanding of the challenge and the potential likely costs and implications that it's going to have to their portfolio if they don't take any action until the last minute, and then help them plan for that, then that can only add to your credibility and help you really with that customer, but probably help you get recommendations from them for other investors that they know as well. So I think it's really important that we just start talking about it, because it's 2025 sounds a long way away, and 2028 even further, but look how quickly the years go by. It's going to be here before we know it. And if a customer ends up with a property that they can't let and they can't mortgage, then they're not going to be thanking their broker for not helping them or advising them on it.
That segues quite nicely into a question from our audience. It's how might lenders and brokers suffer if landlords don't act quickly enough, if they don't implement these changes? You mentioned that you might have properties that are unlettable or unmortgageable.
Yeah, exactly. Yeah, as I say, particularly for landlords that have got big portfolios, they really need to be planning as they get vacancies over the next years, how they're going to do the work and how they're going to fund their work as well. As I say, they're probably not taking into account they might have to vacate their tenants and house them at their cost. And the nearer they get to that deadline, the more important that's, or the more likely that is to happen. So yeah, I think we've got solutions in terms of we can put them on a bridge and help them do it, but they're not going to be wanting to do that as a panic in the last minute, I would say.
Another question that's just come in is obviously you mentioned during the presentation about rising costs, inflation, interest rates. I mean, especially on the energy bill side, do you think more landlords might be more inclined now to make energy efficiency changes because it's become the bills have gone up as much as they have?
Yeah, you'd like to think so, and certainly with clients that I've spoken to through my broker relationships, they're definitely they're definitely looking to take some action like that, because costs are only going to go up, and the longer they leave it, the more expensive it's going to be for them as well. But not forgetting these investors are responsible landlords that want to look after their tenants and their properties. So they want to do the right thing for them. So yeah, I do think so.
And I suppose just specifically on the bridging side, I mean, what the benefits of bridging in these kinds of scenarios is it is very quick and very flexible. I mean, of what if you had to, if you had a broker who was a bit hesitant about using bridging in this scenario, what would you say to them?
I mean, it's a necessary means, because if you're on a term loan, quite often you're not able to do any significant works on the property while it's in the term. So you'd be breaching the terms of the loan if you try to do anything significant. So bridging is a way of refinancing away from that to, and if you roll the interest up, you haven't then got the monthly interest payments to make if you're having no income coming in because you've had to vacate the tenant. And then you can switch back to the term once the works are done. So it works really well for that kind of scenario, and avoids them being in trouble with their lender for doing work they shouldn't be.
Great. And how can brokers upskill on development finance and bridging if it's an area that they don't know a lot about or they haven't had a lot of experience in previously?
Yeah, that's a good question. First of all, I'd also say upskilling on the EPC challenge. The white paper that I mentioned is actually on our website under the intermediaries page, so anybody can have a read of it. And there's a lot more information in there than I've put in the presentation that will help you improve your knowledge. And there's part 2 coming in the coming weeks and months for this as well. In terms of bridging and development finance, I'd say that all brokers have got relationships with their BDMs that they deal with for the lenders they deal with. So just engage with the BDM and get a really good understanding of how the bridging product works and the different nuances between the terms available from different lenders. And you probably don't need 100 lenders on your panel. You probably just need a handful that cover all the different scenarios that you come across. And as I say, really get under the bonnet and understand their terms and their product. And as I say, run the cases past the BDMs that can help shape the deals for you. On the development side of things, again, at Shawbrook, we've got relationship managers that reach out to brokers and have good relationships with brokers. And it's just a case of engaging with them and understanding what they can do and then trying to run those cases they get past them.
And how, bridging and development finance are just one tool that brokers can use. How can brokers determine whether a bridge, a second charge, or a standard buy-to-let mortgage is best for their landlord client?
Yeah, that's a good question. I think, first of all, the brokers have a really good understanding of their client's business and where they are financially and what is going to be the best solution for them from their experience. But as I say, just having really good relationships with the lenders and running, if they're not sure, then there's plenty of support here to help make sure we come up with the right solution for the client in each circumstance, really.
Okay. I've got another question from an audience member, as if a landlord has problems with builders or contractors and that results in a delay, is there an option to extend the bridge? And I suppose, especially at the moment, from my understanding, there's a lot of building, because of the high demand, there's a lot of delays at the moment.
Very, very good question. That is, yeah. And there's been delays through the pandemic where there was no supplies, where there was nobody able to work and things like that. So the answer to that question really is different bridging lenders have different ways of looking at this. So at Shawbrook, we are really supportive if there's an overrun and we can see that progress is being made and we understand why there's been a delay, and we can get a really good understanding of what's happened and where the deal is at now. And more often than not, we'll then support by extending the bridging loan accordingly. But there are other bridging lenders that wouldn't take that view, and the day after the bridging loan expires, there's quite heavy penalties and penalty interest and defaults charged and things like that. So it's really important that people understand who they're going to, and it's not necessarily rate driven, but it's what happens in those kind of circumstances. It will be there in the terms and conditions, but no one likes to think about it until it gets to that point, and it's too late then. So that relationship with the lender is even more important, and that's the broker's role to get a really good understanding of who they want to work with.
Another question from our audience here is, what are the main works that landlords should expect to carry out? And I suppose it does depend on the property, but I suppose, from the case studies that you've dealt with, what are some of the most common
it's how long is a piece of string there, isn't it? Because you've got older properties that are going to need substantial work and others that might just need change of light bulbs and not much else really. So the government website on the EPC changes really does outline in quite good detail what you need to do to get to each level or likely to be able to do. And again, it's just for the landlords really to go through their portfolio and just draw up a plan of what they think they need to do and then cost it.
And I mean, do you think that, I think there is some scaremongering at the moment about buy-to-let landlords possibly exiting the sector because it's becoming too expensive. I mean, do you think that EPC changes might make some smaller landlords exit the sector, or is that?
I think that's potential. Yeah, again, some brokers I've spoken to have started to see a little bit of that. But then again, on the flip side, that could create other opportunities for people wanting to come into the market and potentially being able to pick up a portfolio slightly undervalued if somebody's taking the opportunity to retire, or for larger landlords to extend their portfolios further. So there'll always be a bit of exiting and an opportunity, I think, no matter what the circumstances are.
And another question from our audience is the industry doing enough to encourage and support landlords to make changes soon, despite there being no formal deadline?
That's a good question. As I say, I think that there can be more done. And I think, us doing sessions like this helps. And just as we go about our job on a daily basis, going to meet brokers, it's just having the conversation and keeping that conversation going and, always in our thoughts so that more can come out. As I say, we're about to publish another report in the next weeks and months, which will be well publicised. But yeah, there's always more that can be done, I think.
Well, I look forward to reading that report when it comes out. Just got more of a technical question about the portals.
Yeah.
How does the portal decide which property is eligible for an AVM?
So we've got quite comprehensive and complex rules behind the application process. So we engage with an external company that run the AVMs for us, and there's rules as to what properties qualify for it. So as I said, it's 2 million in London, 1 million outside of London, single dwelling house, single flat in a block up to 4 stories, small HMOs. And from the land registry search, it will know what the property is and whether it qualifies or not. So if it's next door to a commercial, it probably wouldn't qualify, so it won't let that run. And then also, as it runs the AVMs, it has to reach certain confidence ratings to be able to get to pass, first of all, and then to get the maximum loan to value. So if it doesn't quite reach the confidence rating we need it to, then it would just perhaps result in a slightly reduced loan to value. If it goes too far below the minimum, then it would just reject the automated valuation, and then you need to go to physical valuation. But at least you'd know before you've even submitted the application and got to do a hard credit search. You find out very early on.
And talking about the portals, I mean, I know that the bridging portal was introduced last year. What has the broker feedback been like on those kinds of portals, and do you think more lenders should introduce such portals?
Yeah, the feedback's been phenomenal, actually. As I say, I've had brokers come to me that perhaps didn't use Shawbrook so much before, and they've used it once or twice, and now all of a sudden they've built massive pipelines because they can see the benefits of being able to use the process to speed up the process, especially when you've got sort of record applications across the market at the moment that slowed everything down quite significantly. If we can remove the perhaps 10 or 14 days to get a valuation done and returned to us, then that speeds up the process a little bit. So it has been really, really well received in the market. It didn't come cheap. We spent a really large sum of money building it ourselves, so it's not an off-the-shelf portal. It was built with the help of our brokers' feedback as to what they'd like it to be able to do. So yes, other lenders probably should, but whether they've got the capability and the capacity to make such a big investment, I'm not so sure.
And I suppose you kind of mentioned in the presentation that there a lot of the property stock in the UK is Victorian, and so it has lower EPC ratings. Are there kind of areas where there are more properties that are rated C or below, like hotspots where there might be more issues?
Yeah,
more brokers who may work specifically for certain regions who might need to really keep this at the forefront of their mind.
Yeah, going back to the slides, it was London and the southeast was predominantly older stock, and I'm just going back to the slides now, and I think Scotland and the southwest was similar as well. So there are areas that are going to be more affected by it, I would say. Yeah.
And obviously you mentioned in the presentation about some kind of incentives for people who improve the EPC rating whilst they're during the term. And Do you think that that's something that more lenders should do, offering kind of, rather than offering a discount from the off, if you have a good EPC rating, kind of offering more incentives for landlords to improve?
Yeah, I do think so. I think we've seen perhaps a few gimmicky things that some lenders have done, which, the odd 0.1% off an interest rate here or there. With rates going up all the time, it's soon forgotten. Whereas at a time when they've been through the costs, getting a bit of a rebate on a fee and help towards getting the new certificate, it seems to be help at the right time and a bit more quantifiable because you physically get the money back. So I think everybody's looking at it, and it'll be interesting to see how the market adapts and changes as it gets nearer.
And do you think landlord awareness has improved? I mean, the white paper that you did was in February. Do you think that awareness overall has got better, or is it kind of still the same?
I think it's slowly improving. As I say, I meet with a lot of brokers and not as many clients because we don't deal directly with clients as much. But the clients I have met have got it in mind, and you get a variety of responses. Really, either they're switched on and they're fully aware and they've got a plan, or it seems a long way away and they know about it, but it's not going to affect them yet, and they'll deal with it when it comes, kind of thing. So I do think there's a bit more awareness, but I think there's still the need to plan better needs to be improved, I would say, from the people I've spoken to.
Another question from our audience is, some works do more harm to properties than good. How can brokers help landlords choose the correct renovations and reputable tradespeople?
Well, that comes down to that piece around signposting suppliers that are known. And I know a lot of brokers network in their regions, in their areas, and have like a network of people that they can recommend to their clients, which again adds to their credibility. But if for clients themselves, they really need to perhaps build a power circle of people that are their team that they go to for not just for this challenge, but even when they're buying properties and for works, and just local trades that they know are going to do a good job and they've known or had recommended to them. A recommendation from somebody means a lot more than picking a name out of a book, doesn't it? So I think networking and seeing who the brokers know that can help them if they haven't got their own connections, probably a good way.
We have some more technical questions around the EPC legislation, which is obviously not come into law yet. It's questions around whether there are requirements on management companies to implement changes on leasehold properties, or if there are exemptions on semi-commercial shops with flats. I suppose that's quite hard to answer because it's still in process. So, I mean, from a lender's perspective, it's very hard to kind of give that hard and fast advice, isn't it?
It is, yeah. I guess the answer to that really is just keep informed on the HMRC, on the government website, for the changes, and it will have all the details there. But there's not really anything I can comment on this.
But I suppose from a lender perspective, it's very difficult because you want to be able to give more concrete advice, but you don't want to give misleading advice.
Correct.
The legislation undergoes changes, or there's new exemptions and so on. Just check. Have you seen more kind of brokers coming to you looking for that more specialist, like I say, specialist lending, but bridging or development finance solutions for this? Is there starting to kind of be more business coming through looking at looking at EPCs specifically?
Yeah, it's a difficult one because brokers generally don't always, they'll come to us with a deal and they say, they need to improve the property, but they perhaps don't specifically say, I've got a customer coming for a bridge to do changes to their EPC rating. It's just general property improvement. So we probably don't know how many of them are specifically coming to them just for that reason at this time. I think we'll get more of a picture when we've only just launched the energy efficiency discount, but when we start to build up a bit of a picture as to how many rebates we're doing, where people have improved the rating, we'll get more of a definitive understanding at that point, I think.
We have another question. Is the government white paper on revised EPC ratings for buy-to-let still a white paper or law? And I suppose if it is a white paper, does the new Prime Minister's intention to drop the green energy proposals of her predecessor mean the proposed EPC requirement will also be scrapped? I mean, that is a very good question. I wish we had an answer.
Yeah.
I mean, I don't know if you want to have a stab at that, Lee.
No, I don't know yet. It's too soon to tell.
Unfortunately, we just don't know. Everything is a bit up in the air. Do you think the EPC changes, if they do come into effect, could be a really big opportunity for specialist lenders? More buy-to-let landlords might have to come to the specialist lending market because there are more unique changes that they might have to make.
Yeah, I do think that. As I say, I think we need to keep in mind this isn't legislation to be unhelpful. It's here to improve property stock for tenants, and to also help with the environment, which is obviously massive, isn't it? So yeah, I think it's certainly going to help the specialist lending market, but I think it's more of an opportunity for brokers to make a difference with their clients, really.
And I suppose especially if brokers have portfolio landlord clients, this is a really big opportunity for them. I suppose what should portfolio landlords, because it is more challenging, will be more challenging for them. What kind of things do they have to get in place, or what action plan? What kind of things should they be thinking about?
I think they need to look at their tenancy schedule, when there's likely to be vacancies. So when is there going to be a better time to be able to get the works done and plan accordingly? And as I said before, really just get that team of people around them that can just jump as soon as they've got a project to be done, and they can plan them in a timely manner, rather than trying to get hold of. Everyone knows how hard it is to get hold of an electrician or a plumber when you need them. If you've got it planned for the next 3 years in advance, then they know where they are, and so do you. So that's what I'd say.
So I suppose just to we're coming to the end of the session, I suppose, what would you say are the main challenges for landlords at the moment, and how can they be overcome?
Yeah, I think the main challenges are obviously costs going up and up, and the longer they leave it, if inflation starts to drop, it just means it's going up less slowly, but it's still going up. So the earlier they can plan, the better. And as I said before, really the biggest challenge is going to be if they've got tenants that they need to vacate and house at their own cost, how are they going to do that? Because that's a massive challenge. So yeah, I think it's just planning really.
And if you I suppose just for brokers, what should they be, just to round up and summarize, what can brokers do to best support their landlord clients, and how? And
I think, as I say, I'd recommend reading the report that we published and the follow-up that's come in, and just familiarise themselves with the government website pages on it, and then be a trusted advisor to the client, to talk to them about it, what their plans are, and to help them make up a plan, and perhaps come up with some solutions that they may not have thought of to help them get over that, because it might be keeping them awake at night. Who knows?
And also from a lender's perspective, what can lenders what can they do to kind of better promote awareness?
Again, I think it's a case of just keeping it out there in terms of what we publish social media wise. Keep doing sessions like this to get the word out to lots of brokers in one go, and do sort of roadshows, round tables, things like that. But just keep it in our day-to-day thoughts and minds when we're out with our brokers talking about their clients.
Well, thank you so much for your time, Lee. That was really, really helpful. I hope the audience found it as helpful and useful as I did. And if you do have any questions for us, please let us know. And I hope to see you guys again at another lunchtime learning session. And hope you have a great rest of your day. Thank you so much.
Thanks, Anna.